McGuire joining us from XM in the studio. Great to see you in person, Pete.
Lovely to see you, Andrew.
Why don't we start with the Aussie dollar, because we did have those retail sales numbers late this morning, which did surprise a little on the upside.
Yes, which is good news.
In what sense?
Well, surprising on the upside. I mean, surprising on the upside as far as that it's not as bad as what we anticipated. And that can be sometimes the course of events. You know, you're at the end of February, and we're coming after that summer period, and as far as Christmas is concerned, and the bite of inflation, and where you're looking at that Aussie dollar. So the overall picture, I think, was not too bad.
So, I mean, in this sort of environment, though, good news is bad news.
Yes.
Vice versa. So
the markets liked it.
Yes, well, certainly okay with the Aussie.
Yep.
Had received a bit of a bounce there, but is that on the prospect perhaps that just reaffirming that the RBA is likely to stick to its guidance of where it's taking rates?
Well, probably. I don't think they're going to back off it anytime soon, unfortunately. That seems to be the picture globally. Those numbers coming out as far as PCE on Friday night in the States. So let's just see where we run, and whether that 5.35 is going to be the headline in July of what the Fed's got their guidance on, and how much further or more aggressive is it going to be if they ramp up in April.
Pete, do you think anyone has any idea what's going on really? Like,
No.
you look at, you're looking into the next 6 months.
Andrew, next
That
6 weeks.
Yeah.
Yeah. I don't think they do, because I'm not sure whether we've managed the inflation story. There are so many global themes that are starting to play. Everyone thought by China opening up there'd be a bounce as far as base metals. We saw a big pull back since the end of January. Now, there just seems to be, I think, so many moving parts to that whole equation. Energy's well back. Currencies are volatile as ever. And what's going on with King Dollar, and where's Euro going to be if they knock it up another 50 or 75 basis points at their next meeting?
Well, you talk about the King Dollar. I mean, it's ruling the roost at the moment, isn't it, along with those bond yields?
Absolutely. Back at 104.50, 104.60, and it's been incredible volatility for that US dollar index. We were approaching nearly 100 there only a couple of weeks back, and now it's back at that 105.50 yesterday, and we've seen a big washout overnight. So there's always surprises, and that's why that 6-month window, as you made reference to, that's a long time away in these markets.
You mentioned Europe there. That's actually showing surprising economic resilience, isn't it?
Yeah, it is overall. I mean, when you're thinking about, they've had a very, winter's been kind to them on 2 factors. First off, low energy prices, which is wonderful from an inflation side, and the second one was a warmer than expected winter. So the drawdown as far as natural resources, gas and heating, so there wasn't as massive a drawdown, so that didn't spike the inflation as heavily as what one could have imagined. If it would have been if those 2 other ingredients had been ratcheted up, crude at $100 a barrel and a freezing cold winter. So they got out of there with a wonderful situation and a wonderful storyline, and that's to their betterment over the last couple of months.
All right, well, I mean, you mentioned crude. What are you seeing there at the moment? A couple of, those different dynamics at play as far as supply and demand is concerned. With, you mentioned that China story, that likely demand. Also, you've got the Russia situation turning off its exports essentially just overnight, in fact, cutting that pipeline to Poland. What are you seeing in the oil market at the moment?
That worries me from a geopolitical standpoint, what Russia does, and whether they could create angst to traders and to supply out there globally, because we all understand it's nearly a zero-sum game. By the time you add everyone's production into what we're using daily in demand, about 100 million barrels a day of consumption, if there is a monster in the pack, like a Russia, Saudi Arabia or America, they're all big export numbers, then that can create massive disruptions to price. And that's what we don't need at this time with inflation in the current situation. That's the uncertainty that faces, I think, consumers and certainly traders in the energy space.
When you would talk about what's going on in Ukraine, Russia's ongoing offensive there, do you feel as though that's sort of all those risks are priced in at the moment, or is there the potential for something more dramatic to happen. I mean, certainly at the moment it's looking as though that's just going to be a protracted battle.
Yeah, you'd have to think so.
It's a war of attrition.
War of attrition. It's a year in, and there doesn't seem to be. If it was and I mean, I've been around Gulf wars. I've been following from a geopolitical standpoint for 30 or 40 years, and you think, well, you know, these are big themes. Well, these at the moment, it seems to be, as you mentioned, a war of attrition. But there can be powder kegs that can present themselves in those times, and this is what we don't want to face from a consumption side. We don't want to see a spike in oil prices back to $90 or $100 a barrel, and so that's where traders are, and I think the world is sitting at saying, yeah, just back off on the energy side as far as cost, but it's always an unknown when you're dealing with these animals in the field being, you know, the big producers.